Good morning, good morning, good morning. Bonjour, guten tag, buen dia, and all the shalom, salam, however you roll. Good morning, and thanks for joining me today. There's a lot going on. It's insane the amount of stuff that's going on at the same time here, given that we're going into the holidays and I'm off next week. I'll be here Monday, Trader Bite Monday, and then I'm gone till Christmas Day, and I'll be back in business on the 26th. Just a heads up. This is episode number 2377, 2377. A lot of Trader Bites, close to 10 years of Trader Bites. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Is there an echo? There shouldn't be. Not sure why there would be. Okay, so looking at what we've got going on our convergent trading pre-market summary sheet here. The camera should be fixed, folks. The max headroom thing should be fixed. And we're back in full swing here. So looking at what we've got today, we have a mixed market. We have a completely balanced S&P. The S&P is balancing at the lower end of the range. We'll look at the technicals in just a bit. Nothing going on in terms of earnings. And then after the close, we're looking for Lennar. Lennar is expected to report. Come on, Lennar. Lennar is supposed to expected to report $4.89 after the close, 10.1 billion in revenue. This is a home builder, I believe. That's that. Today, of course, the FOMC, it is the Fed rate decision day. Yesterday was CPI. Tomorrow is the Swiss National Bank, Bank of England, and the ECB all reporting on their rate decisions and their outlook. So there's a lot going on today. The Fed's going to come out at 2 Eastern, Fed conference at 2:30. And we're going to get a lot of new information that we would need to reprice. Very interesting action yesterday. And then this evening, we get the balance trade out of Japan and industrial production out of China. Industrial production out of China is pretty important given the COVID action. China is still continuing with the reopening narrative. And And Apple made an announcement to allow third-party app stores. That's kind of an interesting twist there. UK CPI lower than expected as well. Didn't quite lift the U.S. markets. And you could see Europe's a little lower than the U.S. markets are this morning. Crude continues. Crude experienced a reversal 2 days ago, and it's continuing higher. Left a gap behind yesterday, and that's where we stand. Here's what we're looking at. Oh, and there's a lot to announce. I'm sorry that I have to dump this all on you, but this morning we've got this this show, the Futures Radio Show, the last one of the year, with Andreas Steno-Larsen. Andreas is the co-host of the Macro Trading Floor podcast, which is one of my favorites. I never miss an episode. They drop every Sunday. They're recorded Thursdays based on the conversation that they have. And well, wait, that's looks like it changed. Hang on, this is incorrect. This is actually at 12. Looks like these fields are linked. This is at 12 Eastern, and that's not the link either. It is edgeclear.com, Delhi. So something went wrong here. It looks like two scenes are linked. So today at 12 p.m., we have the show for about 45 minutes with Andreas and a mystery guest. There will be a giveaway Edge Clear is giving away Edge Pro X for 6 months or something. And again, we have a mystery guest, very, very interesting conversation about the FOMC. Before the FOMC, you can join the giveaway by 11 a.m. today and then join the show at 12. Go to edgeclear.com/deli. It's also linked in the live chat. In addition to that, this other scene that I created, which is now incorrect. Let me adjust that. Tonight, I'm doing, Convergent Trading is doing its annual fireside chat. So this is an event we've held for several years now. It's very interesting. We have a bunch of traders on, but we're going to have Jeff Snyder for his macro outlook. We're going to have Brian Shannon, who's also known as Alpha Trends Online, to come on and talk about charts, technicals, techniques, trading techniques. We're going to have Jared Tindler talking about the end of year goal setting, taking stock of what's happened this year and giving us some tips on how to make the best of 2023. And of course, Brian and John, who are CT Mavens, will be there as well. That is at 7. You can go, you can join it on YouTube. Go to ct.pro/fireside-chat-2022. It's also linked in live chat. I know it's a lot to digest here, but let's get back to business. We are going to start out by looking at what happened yesterday. Here's what happened yesterday. So we had our CPI, huge push up, incredible move. And then what we did is we opened, despite the push to about 4180, 4175 was key for me. Despite the push to 4180, we actually opened still inside of this downswing. Okay, we opened inside. We had basically the same high. We made a high on the open. We made a high at 41. We dropped to 41.22, and then we consolidated. And I was looking for a response. If you recall from yesterday, I was seeing if it's able to continue higher and take out the overnight high. Then I'll be looking to buy pullbacks into 41.90. Or if it fails to do that, then we're looking short, and we're looking for responsive selling back toward, I didn't expect to touch settlement, but toward settlement. That'll be our gap to settle trade. And what it did is it opened, rotated around for a little bit, and then we had that impulse. Remember, I drew that big arrow yesterday. We had that impulse consolidation, pull back, pulls right back to the impulse low, beautiful setup, and then starts to chug its way down towards the prior day's range. It went right to the prior day's high. Very, very, very accurate and precise trading. 40.26 and a quarter was the low yesterday, which was the prior day's high at 40.26. We didn't even leave a gap. Settlement was just a couple of ticks below that. Yes, from the day before. So we ended up closing this gap entirely. Now, I've gotten several remarks. Why are you short? You are wrong being short. Why have you been talking short this whole time? You should be trading price, not your projection of what you think should happen. The fact is, I don't trade what I think should happen. I'm trading based on what the market is telling me. This is an impulse move down. This is definitely an impulse day down. This was seen as a pullback, and it's a pullback as long as it holds the 50% of this entire move, which is up here. As long as it holds that, it's still going to be traded on a structural basis. It's going to be traded so as a pullback. Once it breaks through, then it's no longer a pullback. And what yesterday did is it took back the entire move and it started at the top. It still ended up selling, but I don't have that information. I don't have, unlike the people who got long a lot of CPI, a lot of ES on CPI 4 minutes before the number was released, somehow had that information. Unlike those people, I don't have the information ahead of time, so I have to look at this as a push higher in balance so that we would continue down to 39.46, was it? 39.49, something like that. 39.46 was the number. That's what I've been talking about all week. And then yesterday with the CPI being lower, refuted that. Until it did that, I was going to still play this narrative of looking for structural shorts and being tentative with longs, okay? So that's what we have. If you look at the days, here's the open, here's the close. This open and close were very bullish, but again, we are still playing this big swing down, this big move down from last week. And now what we have is we are trading right in here against the point of control of yesterday. We're trading against the lower distribution. We've built balance overnight. We have complete balance. The overnight point of control is at 40.55. The full session mids at 58. Full session VWAPs like at 56. Yesterday's settlement at 55, somewhere around 55. Yesterday's close at 56. There's a lot going on in this area, and we're coming into FOMC, so you need to be aware. So one thing we want to do always as traders is to zoom out a little bit and see what's going on. Look at what's happened. We took out this key double bottom here on the break higher. We reversed it. We went lower than that. Of course, I'm going to be looking for it to continue lower unless something comes along and says, nope, we're done going that way. I'm still going to be looking in that direction. So again, I'm not trading my opinion or prediction. I'm going off of what the market is saying. And until yesterday, it was saying that it's pretty weak. Okay. So that's what we have. And by the way, we have some weak structures down here. These are the targets down below. The 48.57, the 48.57, the 39.05, those areas. This area here represents weak structure. You can see it right there. And so I have to go with what the chart shows. Just remember, while you're trading throughout the day, you really should be kind of like when you drive, you have to look at the rear view mirror. You can't be caught up in your windshield. You can't be looking down the street all the time. You need to check the rear view mirror and the side mirrors. If you're a good driver, that's what you would be doing, right? If you're a professional driver for a tow truck, a tractor trailer, that sort of thing, you're definitely paying attention to your side mirrors and you're always aware of your surroundings. As a trader, the equivalent analogy can be carried into this action here, where every once in a while, maybe once an hour or so, you are looking at the big picture. And I use this market profile, my intraday chart, this chart here, to look at the big picture to see what it is doing, okay, on a big picture basis. So I want to see, what have we really accomplished? Yesterday, we really used this prior day as a base. You can see there's a base of support right in, let me see if I can draw a box here. Like that, something like that. There it is. This is your base of support, and that's what held yesterday. So warning as we came into that, and so, you know, the market turned where expected. So this is where we stand currently, and it's very blunt, and we still have balance down below at 39.90. I still see this as a magnet attracting price down. We completely rejected that prior high. 41.42 is what it was in the old contract, and yesterday's high, RTH high, was 41.41. So to me, this thing, despite all of this, is still in balance. So as we come into today, what have we got? We've got the, let me pull up my, what have we got this morning? We've got bounce, looking for chop, open auction in range in the lower distribution. Your key area to check today. Key area to check. This The most important area to pay attention to is this 4070 right here. This is going to be your early line in the sand. I'm expecting the market to respond to it, come up to it, test it, come back down, and then I'm expecting us to retest this low. However, we have FOMC in the picture. This market may be non-committal until the FOMC, but pay attention to the 4070 above there. I'm going to be looking longs for 4090, 4110, 4140. Okay, 4090, 110, and 140 above there. Below here, as long as we remain below, we've got the 25. And then the next key area is the 04. And then the 90 brings us back into balance. So that's the map for today. If we're above 70, I'm looking for some good follow through. The order flow, by the way, this morning should be pretty good. I intended to have the pace of the roll done this morning, but I've been very busy. Here it is. Here's the pace of the roll chart. It's down here. Let me zoom in. So we can see from this chart that the pace of the roll, what's going on here? You can see from this chart the pace of the roll. So we're at 70.59%. Out of 78%, we are pretty much done with the roll. By the end of today, the open interest will have shifted almost completely to the new contract. We can start using order flow today. So as it pushes through the 70, I'm looking for order flow supporting the bid, bid getting hit but not moving, supporting the bid. And if it does, then I'm looking for a quick turn to 4090. And then, as I said before, 4110 or so, and then 4140 is key targets. If it gets up here, and has a hard time and it's not supported, it's not able to push through, and it's falling quickly, that I'm looking to day trade this on the short side, 4070 back to 4025. And then now, if we take out the 4025, you have 3990 on deck on the FOMC. It makes no sense to push trades or to seek trades after about the first hour, the first 2 hours. When the European markets close at 10:30 Central, 11:30 Eastern, you really should go do something else and wait for the FOMC, because from there, it is just hedging and it's just a bunch of interns trading. It's not worth your time to trade. Come back for the FOMC. Don't trade the FOMC. Watch the action. The action will tell you what the market's appetite is. And then you have the conference at 2:30, and there we'll find out what the outlook is based on the committee. And that'll dictate what we do going forward. Again, don't forget to join the show today at 12 p.m. Eastern, edgeclear.com/daily. And then this evening, the fireside chat at 7 p.m. Look for the link in our live chat here. Good luck, and I'll catch you at 12, and then I'll catch you again at 7 this evening. You're going to get a lot of me today. Good luck. Take care.